What's up, guys? Welcome back to another episode with AB Investments. And today, AB want to bring you some beautiful information about our enemy number one as of late called AQR. So if you're ready to have some fun, I got some things to show you, and we'll go through. You're gonna love this because Mr. Asness, if you're gonna watch this at some point, um, yeah, you're shit out of luck. But let me see. I'm trying OBS for the first time, guys. So I'm trying to see how this is gonna work. I'm not able to see any of the chats. So what I'm gonna do is I'm gonna log in. Uh, let's see, in a different and see it until I can master OBS. Then this will work. But at least we have some sort of at least we got some sort of like screen sharing for the first time in this channel. So let's all hail the new upgrade. What's up, guys? I see ready for Somoas is in here. What's up, brother? Tater Tot, you're in here. Boom Candles, you're in here. What's up? How you doing, guys? I want to go in and go quickly over this information, guys, so that we can get you know over with this because I have around 12. That's when I go watch the Pantheon radio show. So if you guys are ready, I'll be ready, and whoever doesn't basically kind of see it can see it later. Mrs. Gloria, how are you doing, my friend? Uh, so yes, can you guys all see clearly from Jerusalem? How are you, brother? Let's see. We need. I'm gonna make this as quick as possible, but this is gonna. I want the point of this is to expose these so-called big, like they made this AQR thing to be a big thing. I'm gonna expose to you guys why that company or that hedge fund and Mr. Asness is coming out and the reasoning of why he even is provoking the apes. So I'm ready to have some fun. If you are, let's dig right in. And we're gonna start here with this guy. Can you guys all, first of all, can you guys confirm to me? Can you hear me perfect? Can you see the screen that is in front of you? What's up, Mr. Panulo? Can you guys see AQR hedge fund suffers 10 billion in outflows? Can you guys see this? I need to see thumbs up. Well, on the chat and the video. So more people can join in and see it because I'm trying to get all this done within less than 15 minutes, if not even less, probably like 10 minutes. Come on. Can you guys see it? All right. All right. So this article right here, ladies and gentlemen, thank you, Gloria, and everyone else in here. In the clutch, how you doing, brother? Thanks, Jerusalem. Appreciate it from Jerusalem. Um, so, as you can see in front of you, obviously AB didn't make this article. So no, from now on, I've had some people that, well, not many. It was just like a couple that said, show us receipts before on some videos before, and I had to share a link. And instead of me having to do that and go back and forth with people, if you think that AB makes info up, well, I'm coming for the with the antidote to all that. So AQR hedge fund suffers 10 billion in outflows. Whoa, what is that? Who's this guy in here? That's Mr. Asness. Okay. Let's marinate you. Let me marinate you guys before we dive into the other tabs that I have opened. Let me marinate you guys a little bit with this. Let's get to know our adversary, right? Or the people that are talking crap about us. So we got assets and hedge fund run by AQR have tumbled more than 10 billion over the past 4 years as a lengthy period of poor returns has persuaded many clients to pull out their cash. Now let's see, what time was this? Because this is not June like time frame. This was September of 2021, September 17th of 2021. I wonder why the media, CNBC, wouldn't bring this stuff into effect, right? Or talk about this. It wasn't too long ago, but I got more to show you guys that's going to be like, it's so hilarious about this guy. So AQR Managed Futures Strategy Fund, a computer-driven mutual fund that tries to profit from the market trends, has fallen in size from about 12 billion in late 2017 to 1.5 billion currently. That's in September 17, 2021. According to fund documents, while the fund's bets have often lost money, Mr. Asness is making bets and often they lost money. Wow. So it tells a lot about his new bet, right? He's got a track history for losing money. In recent years, most of the drops in assets pertain to client withdrawals. People are pulling out their money from these hedge funds. And a lot of this have to do, especially of recent, with the meme stocks resurgence and the apes, most likely, obviously, because we are investing majority of our money into these memes versus the diversifying most of them, into other stocks like the value stocks and all that, which is what we're going to jump into right now in a bit. So seeing the outflows come even as Connecticut-based AQR has enjoyed a stronger period of performance more broadly across many of its portfolios after shedding 86 billion in assets from its peak. Yikes, Mr. Asness. AQR, which manages about 140 billion in total assets and is headed by former Goldman Sachs managing director Cliff Asness. That's who the guy that we're up against. Yes, he did last. I remembered was a billionaire, but he was previously to running AQR, a Goldman Sachs managing director, which is not like a very great accolade, right? That right there. In fact, let's go down a little bit more. You guys are going to love what's coming. So, however, the fund has often struggled to make money. While it gained 5.4% last March during the stock market huge sell-off, which was in 2021, again, because this article came out in September. It is down 3.9, which is roughly 4% over the past 5 years and is roughly flat over the past decade, according to fund documentation. AQR is not all that great that CNBC have portrayed it to be, right? The fund has slipped 2.7% in the first 8 months of 2021, even as many of its peers are profiting. And they mention a couple here and there, but we don't want to go through all that to, add more time to this stream. So as you can see, it has all these things where it's like talked about, like first, as far as like where they were and where they at. I'm going to lead you to now through the other tabs where their portfolio is. Their management under assets, we saw here in this article alone. Okay, this right here, ladies and gentlemen, how many of you seen this figure in the CNBC announcement and in the article that they put out, whether on the Weebles or all the trading platforms on AMC and GME, especially when AMC said, the article said, oh, apes are being provoked by such and such, who is one of the biggest management or hedge funds, and they have 164 billion in total assets. I personally have seen it everywhere. Many of you have seen it. Put it in the comment section. Let me see what you guys are talking about. and if you have seen it as well. Well, if you look down here, guys, that's as of April 28th of 2021. We're gonna expose not only AQR's BS as far as like the numbers. We're gonna expose the bigotry of media sources and how much are they also controlled, to what extent, like CNBC and all these things, because they announce these things, right? But look at this as we go across. As of June 6, 2022, AQR has 117 billion in assets under management. And this is what, June 6, 2022. So the 164 from 2021 in April, that was something speaking about the past. Like it's like me talking about once upon a time, I used to be able to jump 50-inch vertical and I used to dunk. I never used to have that. I never will. But now that I've gotten older, I can't even jump half of that. And I'm still in equivalence to it. You're still also betting on the fact that like the way that they portrayed it, or those media sources have portrayed it, was that they are still that conglomerate that still holds all those accolades, where in reality, as you can see now, just from last April, from that 164 under management billion, they're at 117. Here's the funny thing. Now that you got marinated with those things, oh, we're going to look at that in a bit. We'll look at that in a second. This whole thing is going to go by so quick, guys, because I'm trying to finish it all within less than, hopefully, 15 minutes. We'll see. Now, AQR is speaking highly, and and it specifically talks about here, when you go look at their assets and what they're doing in their portfolio, you see that they have, like here, as you can see, the top 50 AQR capital management holdings as of March 31st of 2022, which is beginning of Q2, right? You got to see here that Apple, okay, they sold 4.6, almost roughly 5% of their stake in Apple. They sold 6% of their stake in Microsoft. So they didn't sell everything, right? 10% in Amazon and 4% in Google. These guys have added almost roughly 50%, almost, it's 47.15% over their previously made Facebook position. So basically, in other words, what this tells me is that this guy's, or Mr. Asness, had a position in Facebook. And once Facebook made that crazy drop, Mr. Asness went ahead and added 40, like they added another half of their portfolio. Well, let's say over here it says they have a total of 6.98 million now shares. They've added 700 and let me see. Yeah, sorry. They added 6.98 million shares over to their portfolio, which is an increase of, sorry, I was reading the Taiwan. Nobody told me. Shame on you guys. Let me highlight it so I don't read other. There we go. So they have a total of 2,000,096 of Facebook amount of Facebook shares. I'm assuming here with the Facebook drop after their earnings, this guy said, I want to buy the dip. How do I buy the dip? He went and added 948,000, almost a million shares of Facebook, basically to average down. Well, since then, if you can see, he bought that on an average price of $279. If we go ahead and look of what he thought the dip was, the dip. If we go over here and look at Facebook, Meta Platforms, In the last 3 months alone, Facebook have fell an extra 22 and a half, almost 23% from the spot that it was in since the last earnings when they began their drop. Now sitting at 170. This guy, even on that new averaging down style or mindset, he still didn't even time the bottom correctly. And it was like at least $100 over what the real dip or fall was too. So you can tell that this guy, this hedge fund is under severe amount of stress and pressure from their positions from all around. I mean, we're gonna get to one part right here real soon. You guys get the point with all of these right here as I'm going over them. It shows you here what they're selling, what they're buying, and what they're adding more to it. Let's look at this first. The largest trades. So we've seen how they added this much. They've added, this guy went and added 163%, literally an increase of 163% of his pre-existent, or that hedge AQR's previous existent investment in Moderna. On an estimate of around 213 per share. And when you go look, when you look at Moderna over the course of the past 3 months, it's down 20%. Not over the year, over just the last 3 months. So basically, after an estimate, whether between $213 a share, and he thought that he made an extra 163% add addition to that pre-existing investment. He basically over tripled that investment in size at a cost average of anywhere between $200 to $214 per share. And guess what? Over the course of these past 3 months, because we're in June now, we're not in March, almost the end of Q2, which soon we're going to get, I would say in the end of mid to end July, we're going to get some 13F filings and many things that will show where they at. But just for now, for shits and giggles, we have Moderna is sitting at $144. So much more than less, so much less, sorry, not more, so much less than even the average down point. So we can only tell how much they are over leveraged on this. Their biggest sales, what are they running away from? They're running away from Target. That's one. They're running away from AU, which kind of is understandable, but they sold most of their stake in it. Costco, Microsoft, they sold 6% from here. Costco, they sold 35% of their stakes in that Costco position, because basically they're selling at a higher point. They know that they're anticipating a drop, so they can utilize that same investment to rebuy in at a much lower cost, and that way they can bridge the gap, average down cost value on each share of whatever, like in Costco here and Target and all that, because they didn't sell all their Target shares. They only sold almost 50%, 49.83% off their shares or of their existent, investment in Target. So that's what they're doing, and then buy low. Well, we saw that they were doing that here with this, with this, with this, with this. I mean, oh my God, they are super bullish on EPAM SYS Inc. they increased their position by roughly almost 500% in that. So they're the most bullish on that. So we see these things. Now let's jump over and look at this sector allocation, where they're putting their money, right? So over the years, as you can see here, from 2014 all the way to Q1 of 2022, if you can look here, just simply out of just looking at things, you could tell that majority of the time their biggest investments are in the technology sector, right there. If we look at the technology sector, you can go ahead and look at, we just mentioned some Amazon, Tesla, so many stocks like this. And they are all majority. Actually, let's go look at this technology sector. Let's just go look at XLK, which is the ETF that XLK that overlooks the technology sector and kind of tells you like, hey, where's the technology sector at? Over the past 3 months in total, the technology sector have seen 15 to 16% loss. So basically, when we're looking at the reports of Q2 that are gonna come up sometime in mid to end of July, who knows if some even reports some of their positions much earlier or sooner than that, guess what you will see? I'm trying to make sure that I don't put my legs out too far and then kick out the camera stream and then have to get up and go try to find it. So 26.1% of their portfolio is constructed in this. And we know right here that that is something that has been hit severely, at least overall in the ETF. With the XLK ETF is showing 15% downfall. If you look at certain stocks, because they're not in the whole ETF, they're in certain stocks. We've seen some of them right now in Meta, which is aka Facebook, and all that being so down severely over the past few months, especially. Like I said, we look at Facebook is down 23% just in the last 3 months. Apple, they're huge on Apple, and Apple is down 19% over the last 3 months. We got Google is down 16% over the last 3 months. And let's finish that off with Amazon being down 29, almost 30% over the past 3 months. And your biggest allocation of your portfolio, Mr. Asness, is in the technology sector. Let's jump to another funny thing. You're doing a very great job of making an ass out of yourself. And these CNBC articles and interviews where it's predetermined what is going to be said and what you're targeting, that works on some people, but not on the apes. Because we're very smooth brained and we like to go and look at what we're investing in. And looking at your shit, sorry for the S word, guys. You're in deep shit, my friend. I've just seen it in where you dropped from. Another cool part here is how AQR's model has always been. Ooh, yeah, that's what I wanted to also show you guys right here. They are in majority of these stocks, and you can see here what is done with Apple. You can see here what's done. That's year to date too. You know, nothing new about it. They're screwed over there. Now, they stress a lot by saying that they love value stocks lately, as of late. If it come down that they love value stocks rather than just also the technology stocks or the tech stocks. So when you look at value stocks, just for shits and giggles here, when you look at, you just go to Google randomly and you put value stock examples. The first thing that comes, Bank of America, JP Morgan, Wells Fargo, and Citigroup. Are you kidding me? And if you look at many other like examples of other companies, you can look here. You see P&G, Target, Berkshire. Those are all value stocks. What is happening with them? Slashed, getting screwed. While AQR is loving to show everybody we got 164.4 billion in under management assets, which fell from 248.9 billion in 2019 to last year was 164. Jeez, oh, peas. That's like what? 80, 60, 84? No, like somewhere between 60 to 80 billion dollars that is all taken off from their balance sheets and from basically their assets, and majority of that has been from investors pulling out their money. AQR is clearly trying to make these uh, big statements and big things that, you know, make some noise, make it seem like, yeah, we got this much and we're on top of things and all that stuff, and where in reality you guys just going through this stream. If I was an institutional investor, if you watched AB, or if you're a retail investor who got a couple of dollars and you want to go and invest, and you were approached by AQR or one of their advisors, if you watch AB stream, you would already have probably what, made up your mind on, do you really want to put your money there? Not financial advice, of course, but now when you jump over, look at this ladder, guys, that they're going down on. They're not going up the ladder, they're going down the ladder. AQR had 248.9, roughly 249 billion in assets in 2019, down to 164.4 in 2021. When you look here and you just look at this crap right here, Citadel AQR flagship portfolios far outpacing broader stock market. AQR has 117 billion in under management. 248, 164, 117. Where is the money going? Where are all these billions going, Mr. Asness? You're making a big ass out of yourself. And yet, on top of that, you even have the, like, you have the nerves to come out and talk about apes who just follow the meme stocks and they don't believe in any of that, or like we're all this stuff. You're talking about value stocks and technology stocks, tech stocks, and clearly, even in many articles, it said that your hedge fund can't even, like, it's periodically that it makes money here and there. Majority of the time is struggling, while its competitors or its rivals are making profits. And that was throughout the time. Now looking at these assets under management, where is all the money going? Jesus, you went from 248 in 2018 under management to $117 billion in assets just as of June 6th. Why? No wonder why all of a sudden you came out of nowhere and said, oh my God, apes are this. We're going to open up a short position. We're so big that you're getting smaller by the day. Something is around the corner that equates to me, the way I'm translating all this, putting it together, looking at their history and what they were going through and what they're doing. This tells me, ladies and gentlemen, that somebody is feeling the fire terribly, terribly. Let's look at Mr. Assens here one more time in here and see that their performance over Q1 in 2022 has been negative 7.5%, 7.5%. You know, these things are not small. They're and you look over here and you see assets under management, 52.71 billion. Ladies and gentlemen, I just wanted to make sure to make this underneath the time frame. It went a little bit above it. I just wanted to make sure that you guys seen this, all this stuff about AQR. I can't see any of the comments, unfortunately. I'm still getting to know OBS Studios better and better. I hope you enjoyed some of these things that we're looking at. Soon, we're going to be doing some reactions to some interviews, some things that AB feels like we need to pay attention to, or what we gather from. So if everybody here was satisfied with what they saw, and how beautiful AQR holdings look in a map, if you're a colorful individual, this is where they are. Again, they're betting big, apparently, on Facebook becoming something, or that technology becoming something. Two, just through their assets, they're betting heavy on stocks like Pfizer and pharmaceuticals like Moderna, and a few more here and there. And like, as you can see here, also the Regnitron. I can't never say that company's name, but you guys know what I'm saying. That's another pharmaceutical company. This is what their portfolio looks like, and they want to talk shit about apes and AMC. hodlers and want to scare us with a short position when you're already very, very vulnerable. And in fact, I'll make a bold prediction here. This is going to be this AQR hedge fund is going to be one of the major necks that we will split or sever throughout this movement. They are going to be one of them because they're not only involved just in that short, which they said that it was very small and it's, it doesn't hurt. When somebody is slowly dying, eventually the destination is the same. The destination is death. Their entity is bleeding not just slowly, drastically over the time, over the quarters, quarter by quarter. And it's inevitable at this point, looking at this, with where we're heading and the recession that we're going to hit and the drop in all these stocks. I mean, these guys are literally averaging down by selling from their position at a loss and repurchasing at a low. Problem is that low is too high for the real low that we're at now, and we're only beginning. With that being said, ladies and gentlemen, thank you so much for giving me some of your time. Again, hopefully you enjoyed your weekend, and tomorrow we're going to be looking at a very, very, very interesting week, beginning of new week, new times. And now with that being said, also looking down on all the positions that we are looking at the crypto is still consolidating. It could stay here for a little longer, maybe a few more days, but as you can see, once again, last week, the week before that, I signaled 22,600 is the Bitcoin support, or I'm sorry, the resistance level that I personally have foreseen before. So therefore, it has not been able to meet it or go to it. The highest Bitcoin climbed to is 21,800 bucks, which means it was very close to that level, but even then it's about $800 short of that resistance. And when it met that, it went back down again, and now they're trying to come up. I wouldn't put it past the idea of crypto dumping before the market opens, sometime in the early hours when everybody's asleep or not awake yet. But if it doesn't, I expect a consolidation. Again, none of this is financial advice, guys. This is just my opinion on what I see, and we can fact check this down the line based on what happens with events. We can consolidate in this range for a while, but from the patterns I've seen, less than a month, we've already been through a week, almost 2 weeks through that. So I would say we're not too far away. So if this thing does not break that support level that I see, I don't see Bitcoin within a couple weeks time frame, maybe 3 at the most, holding this resistance line and then eventually we'll go for another sell-off, because people like AQR, as you can see right here, need more money. And in the background, you got people like Mr. Kenji, and you got BlackRock, and you got all these other market makers like Virtue, Sequoia, and all of them who are trying to become market makers in the crypto realm. So therefore, the picture is becoming clearer and clearer, guys. A lot of these hedge funds are going to be slaughtered and sacrificed for the sake of the bigger guys that you see in this that we see in the background, that are trying to become market makers, that working on a system to become market makers in the crypto realm. Once again, guys, sorry to take much of your time. Hopefully it wasn't long. Hopefully it was enjoyable. If you loved it, please consider, guys, hitting that like button and subscribing to the channel. And much love, AV Investments.